Good day all. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Wednesday, the 1st of July, 2030, and here we are, late day. So we had an update today, but the events of the day were interesting. Besides the economic data, we had the Fed minutes, and I think that was important because we're all looking to see are they doing anything with capping yield curve, and they're not yet, but they are certainly studying it. The Fed is very concerned about the COVID-19. It thinks that we're nowhere near out of the woods from what I saw. Federal Reserve President of the San Francisco Fed, Ms. Daly, thinks that we're at 4 to 5 years before we're back to normal. That's the longest I've heard anyone say that, but that's her opinion. That's what I read. What the Fed did do is that it doesn't see that it can make anything but easy money available for quite a while. And that's very important. And that gave a bid to the stock market because they're telling you they're not going to let interest rates get out of hand here. And if they're not going to let them, what are you going to do? Buy bonds for a point? Or are you going to try to make money in the stock market? And that keeps the market going. Obviously, the tech is the area that people keep looking at. You got to forget about the idea of valuations, I guess. But as you know, that's not real. They want you to think that's real. It's not. So at some point, everything comes back to its norm. You got to be careful about that. That's all I'm saying. I read a study from Goldman also where they think that if you wait to buy the deep breaks, they don't occur. I can't argue that. That hasn't been happening. I told you back in April and May, this is looking more and more like how the stock market came out of the funk that it was in 2009 and never looked back. And I haven't been wrong so far in that. And I didn't think I was going to be right when I said that. If you were to ask me, I didn't even want to say it. I thought we were going to go back and correct those lows. Admittedly, we don't know a lot yet. Tomorrow we're going to get jobless claims. Now, I know everybody's going to focus on the unemployment number. I don't think that's the big number. I think it's the claims. We need to see a trend where they start going down. That'll take care of the unemployment number. The Fed doesn't think we're going to get under 10% by year end. Therefore, they're looking tomorrow, the consensus is 12.5% unemployment, which still is an improvement from where it's been. If those jobless claims go up, watch out. I don't care what the number says for the unemployment. You're still caught at this blue line, which in the XLK is the 102.94. It's going to correlate with the QQQ, which is, you know, is the NASDAQ. Why? NASDAQ gets up, makes a high, but doesn't seem to go anywhere. This market got up, made new highs on the move, but you can't really say it's gone very far from the 102.94 area. Most it's been is under, what, the 105 area, so it's playing in that zone. When we take a look at the bigger look of it with a swing line, and this is a swing line, and today I'm going to talk about a discount on my charting course at the end of this. It's normally $179.95. I'm lowering it to $99.95. It's got nearly 54 videos, 6 hours of videos. And it includes, by the way, free. If you're not a subscriber, if you're a subscriber to my morning advisory service, you can't cancel that to get the course at a discount. Cancel that service and think I'm going to give you the morning video. But if you don't get the morning video, you're going to get the whole package. And when I'm through with this on July 4th, because the morning of the 5th, we're raising the price, we're going to kick it to $199.95. So you get quite a break here at $99.95 with charting software and everything. You'll see it at the end. You're not trending. You got a higher high, lower low on the swing line. You can see how the arrows are pointing out. You're over the 18-day average, which means the bias is bullish. I define the line in the sand, and you'll hear me say this all the time, this red line. And when this market was breaking down, what did I say? You're going to go to that 18-day average, at least that's what I thought, and that's where you're going to hang. And I kept saying, why do I think that? Because that's what happened here, it happened there, and there. And until it stops working, you assume that what isn't broken keeps working. I know I said that. It's on the tapes on YouTube. Go look. And that's pretty much what has occurred. Where's the resistance? It's right in front of you at 105.91. When I will say to you over and over, the first time you hit an upper Bollinger Bands where I think pros are taking money off the table. And you'll say, no, I'm looking for the breakout. And I guess if you have a big long-term picture, there's nothing wrong with that. But that doesn't mean you don't get opportunities along the way to do other things. And let's face it, when you're doing spiders and ETFs, you're trading. What's Nigerian do on TV? They're traders. They're not telling you, I'm buying them and I'm holding them. By its own nature, an option expires on certain parts, right? Now, they don't in the spiders. They don't in the ETFs, they do in the options. Well, this is very similar in its nature to option trading. That's what I believe. When I take a look over at what the market's done in the Bollinger Band, the slow stochastics, you can see that the market here coming to resistance and here overbought. I put the two together. I still think that's going to be the case, and I think tomorrow's going to be a muted day. Who wants to take a lot of position when you can't trade on Friday, Saturday, or Sunday? You're sort of at the market, whatever it's going to do come Monday morning, you're at that mercy. A lot of people don't like that. When you go to SMH, you got a lower low, higher high. Again, the bias up, but again, in this market, you're overbought. Any reading over 70 in slow stochastics is overbought. You're more sideways than you are anything right there. In the industrial sector, the trend is what? You got up today to the 18-day average. That's a resistance point. There's a big but. You cleared 69.83, so you're not in a downtrend anymore. Now, as this market was coming down, I was telling you, it is very oversold. I'd like to see it hit the lower Bollinger Band, but it's already hit the 100. Maybe that's enough. Market hung there, and now it's come back and knocked out. There is no trend. The bias is down. It fights with momentum to trying to get away from an oversold condition. As long as any of the numbers of the slow stochastic are under 30, they're oversold. In XLE, no trend. But you do have a fully embedded reading, which to me means the pros are selling this market on rallies, looking for it to come back to the lower Bollinger Band, ideally, and they're wrong if the red line closes over 20, but I think they're selling this market. In QQQ, well, today's high, 251.52, you did not hit the upper Bollinger Band. I do think the pros will take money off there. I don't care if I'm right, wrong, doesn't matter. That's what I would be telling. If you were sitting next to me, that's what I'd be telling you. You're overbought, first challenge of the Bollinger Band in non-trend market. Doesn't mean you're not at new highs. I congratulate the market. It keeps going up for these highs. And it made it by a couple of pennies today, but so what? In the ETF of EFA, and on this market, by the way, this, I had said the wrong things. If you look up here, I try to give you definitions of what these markets are. These are not U.S. and Canadian emerging markets. These are markets, and I thank my friend that wrote me about it, that have to do with the Far East, Australia, and Canada. Those are the ones that you look at. When we look at, by the way, on this chart, you're still what? I've got divergence. I've got momentum up. I got a trend that's down. Today's rally at 61.29 hit that old high, didn't quite take it out. So the bears are still in control, basically. I don't see anything there. GLD, until you lose the embedded reading with the red line closing under 80, you're friendly. Now, this is staying stronger than the futures. Tonight, the futures are flirting with losing that reading. So if you don't get up a couple of dollars in the futures, at least probably 3 or 4, you might lose that reading. We'll see what happens. So be aware of that, because this is very much a function of what the futures do. I'd be watching that. That's my point. In the minors, no. You're hit the upper Bollinger Band in an overbought condition. I think the pros are out. TLT. To go through the report today, did you really have to do that? That's the point that I'm making. You have a market that was trying to embed right here, didn't quite make it with today's action, and as you can see, you're losing everything by the end of the day. Neutral, neutral, neutral. But why go through that? And I'm going to ask you another question. Why put yourself in harm's way in markets like TLT in front of the jobs data tomorrow morning? Jobless claims. I don't think you need to do that. I think that if you learn futures mentality, futures market mentality in these markets, it pays off, because many people aren't used to these. Remember, ETFs and spiders are relatively new. Futures been around a long time, and we learned certain things in futures that I bring to you in these markets, because this is where the cowboys are. This isn't investing. This is trading. There's a huge difference in my take of what an ETF and a spider is absolutely huge, versus buying an Amazon, a Tesla, I can go on, buying the individual company. In FXE, well, we're fighting a battle at the 18-day average. The market's now got a pattern here that if we take a look at it right here, you can see 105.67, come up, come down, and back up. Now we have higher lows, lower highs. You're not trending. You're oversold. I wouldn't know what to do with it right here. So I put that together. I try to come up with something. Now, as I told you about my charting course, in the charting course, and I'll start it for you so you can see what this all looks like and what you're going to get. I teach in my own certain way. It's 54 videos. In the videos, I do a number of things. In the videos, I'm going to teach you 5 steps to look at a chart. I think you can handle 5 steps. And I build them, and it's very repetitive. It repeats what it does so you understand that each step builds on the other. You're going to learn swing lines, moving averages, slow stochastic, Bollinger Bands, window envelopes. Those are the 5 things you're going to lose. More moving averages than you see here. You're going to get access to the videos. You're going to get charting software to work with it. And you're going to be able to put pieces together. When I'm through, you're going to look at a chart different than you're looking now. That doesn't mean that you'll like it. You might throw it out. But it's going to take you about 2 weeks, putting in just a little time each day to get through the course. That's how it really works. So remember, if you did an hour each day, you're done in 6 days. It's not a race. It's about learning. Right now, I'm giving a break on the course to $99.95. The course is retailing today at $179.95. I'm then going to raise the price on July 5th to $199.95. So it's quite a break for people if they're interested in getting all that. How do you do this? You go to our website. That's the way I would do it, or you can call my staff. They're there to get it done for you. If you go to the website under the word education, you don't need a coupon or anything. It's right there. You have 3 days to do it. You decide if you want it or not. I've yet to have people say, Jay, I didn't learn something. And I've been doing this a long time. I've taught futures trading, just so you'll know, probably 30, 40 years. Taught at colleges. I've done a number of things. I love teaching. I don't want to be a teacher. I like the side that makes money, but I love to teach, and it's going to go PowerPoint, explanation, and you build the PowerPoint with me. Then I'm going to teach you how to put it on a chart. Now you know how to make it appear on your own charting software, because every charting software will have these, of any merit, it's going to have all these things except the swing line. That's the one thing they won't have. I won't license it out. The last thing that they have, and you'll need the swing line, but our charting software has it for you. And you can build it yourself if you want to go out there and do such. It's not that difficult. But then the last thing that you're going to do is you're going to join me every morning, and I'm going to reinforce what you're learning in charts of today. That's why I put out that morning subscriber video on the futures. I think you'll see it all come together, and then tonight when I do these, everything falls in place. I'm Ira Epstein. You have a great day. I'll see you all tomorrow. I might be a little later than normal because, hey, you're not even open until Monday again. So if I'm a little late, put up with it. I'm Ira Epstein. Take care.